Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil earnings. Aramco expected to report that higher output and a recovery in refining margins is offsetting softer crude prices, while BP investors are waiting for more updates on its divestment program. Election day in the United States. President Donald Trump endorses former New York Governor Andrew Cuomo for mayor and threatens to withhold federal funding in a last-ditch effort to prevent Democrat Zohar Mamdani from winning in today's poll. Plus, risk off. Asian stocks and futures extend losses as Palantir's earnings and uncertainty of the Fed's policy outlook weigh on sentiment. Well, it has just gone 9 a.m. across the Emirates. I'm Johanna Bersetchi in Abu Dhabi, live from the ADIPEC conference, where executives, policymakers, and energy leaders from across the world are gathering to discuss indices trends and the global outlook. We did plenty of interviews yesterday. We're going to play some of them on the show today, and then also a lot more to come this afternoon as well, alongside a panel that I'm doing. But before we move on and talk about markets, I do want to bring you some of the big news in terms of earnings. We have just got Aramco earnings, so let me bring you some of the flashes here. Third quarter revenue has come in at 386.1 billion riyals. It is setting the adjusted net profits, I should say, is a big beat versus estimates, 104.92 billion riyals versus estimates of 96.91 billion riyals. Third quarter performance-linked dividend is at $200 million. Remember, this is the performance-linked dividend, and that has been trending lower. The base dividend stays at $21.1 billion. In terms of other commentary that we're getting, Aramco says increased production with minimal incremental cost, and surely that's part and parcel because of the role that artificial intelligence and technology is playing in allowing for that to happen, the increased production with the minimal increased cost. As for other commentary, they say that they're continuing to enhance upstream capabilities as well. In terms of some of the other numbers that we've got, again, I broke to you the third quarter adjusted net profit. That is 104.92 versus estimates of 96.91. Total revenue 418 versus estimates of 375. So what we got is a beat on the top line. The bottom line, the dividend remains as it was for the base dividend. Of course, the performance-linked dividend continues to trend lower. In terms of the free cash flow, third quarter free cash flow has come in at $23.6 billion, and then they have announced higher sales for their gas forecast. So again, gas is a very strong growing business for Aramco too, and here that they're saying that they are announcing higher sales forecasts, and they're targeting sales gas output capacity growth of about 80%. So a lot coming through from Aramco this morning, but a recap of that will come shortly. Ultimately, a beat on the top line and the bottom line. All right, let's switch over and talk about well, no, let's move on. I have Mitchell sitting with me here, our experts from Bloomberg, so to discuss this. I was going to go through markets, but since you're sitting right next to me, Mitchell, let's talk about Aramco earnings. Seems to me that we had a break, a beat, both on the top and the bottom line here, blowing through market estimates. But at the same time, the backdrop to all of this, as we've been discussing in the last week, the other earnings that have come through, is lower oil prices.
Yeah, it's largely an upstream story for Aramco and the other of the world's biggest oil companies. Last week we saw Exxon, Chevron, and TotalEnergies all report higher production in the quarter. And as you say, it comes as oil prices are trending lower. We have OPEC over the weekend saying that they're going to pause the output revival this winter, which could potentially impact prices to the upside a little bit. But, these companies are all clearly focused on pumping more oil.
Yeah, no, absolutely. And just, waiting to hear a little bit more commentary also around their refining business, because I think that also downstream business was one of the positives for Aramco over the last quarter. So waiting for some commentary there. While you're with me, I also want to talk about BP, because they're going to be reporting earnings later today. This is a company that has been under a lot of pressure from shareholders. They've had to change their strategy. I was on a panel with Murray Auchincloss, the CEO, yesterday, talking about how they were under pressure to change their strategy and go back to their bread and butter, which is investment in hydrocarbons, in oil. Is it paying off?
Yeah, BP is looking to reverse years of underperformance. They lagged all of their rivals in recent years, and they see investing in the upstream oil and gas business as a way to narrow the gap. So far, the last quarter seemed to be a hint of a turnaround, analysts said. Net debt is at stopped rising, and production increased, and they were able to maintain their share buyback level. And their oil trading performed well in the second quarter. And in the third quarter, they've already warned that oil trading performance was weaker, but production was higher. But that also comes with lower prices.
What about divestments, right? That's also been a big focus for management. Yesterday, they announced that they're selling down some of their shale assets in the U.S. How much, again, scrutiny is there going to be from the analyst community on that side of things?
Yeah, BP is aiming $20 billion of divestments by the end of 2027.
Yeah.
Yesterday was $1.5 billion of divestments of U.S. shale pipeline stakes. So far this year, they've done about $3 to $4 billion of divestments, and the marquee asset that has not completed yet or been announced is Castrol, the lubricants business. The market is expecting about an $8 to $10 billion valuation. BP is evaluating whether they want to sell that business. It's under review, but BP has a new chairman who started last month. They're undergoing a sweeping portfolio review as well as a review of costs, and they'll need to determine whether they ultimately want to sell Castrol, but they're going to need to make significant progress toward that $20 billion in the coming months.
Yeah, Mitchell, really good to chat to you. Thank you so much, Mitchell Furman. Getting us up to speed on all these earnings. Aramco earnings out. They just this hit at the top of the show, and BP coming up later today. Let's broaden it out and take a look at markets as a whole and how things are shaping up. This morning, we have a lot of red on the screen, actually. So S&P futures down 0.5%. You can see that the handover from Asia Pacific also not that positive either, down about 0.6%. So a bit of a soggy start to the session. And again, Palantir earnings were in focus. That compared that to the deal, another big deal that was inked yesterday between OpenAI and Amazon, which was a big positive in Magnificent Seven space. But the picture this morning, one of risk off. We've got gold also slipping, continues to fall, down about 0.5% this morning. 3,980 is where we're at. And then Brent, obviously a big focus here at ADIPEC. Short term and long term, we are sitting just shy of $65 here, down 0.4%. And switching over one terminal chart that I just wanted to flag to you today. Yes, we speak about the broad rally, or I guess the back-to-back rally that we've seen for the S&P, but actually beneath the surface is quite interesting. Once again, we're seeing the breadth narrowing, i.e. only 40% of the index is sitting above that 50-day moving average, which tells you that, again, concentration is a handful of those stocks. No surprise, really, led by AI and Magnificent Seven. All right, let's switch over and talk about some U.S. politics. President Trump has endorsed former Governor Andrew Cuomo, threatening that if Democratic candidate Zoran Mamdani were to win, it would be highly unlikely the city would receive federal funding beyond the bare minimum. Both candidates had this to say about the president.
We need a mayor who can stand up to Donald Trump, who can get the funding that New York deserves, who can make sure the National Guard does not come to New York. I can stand up to Trump. Trump will go through Mamdani like a hot knife through butter.
Embrace of Andrew Cuomo is reflective of Donald Trump's understanding that this would be the best mayor for him. Not the best mayor for New York City, not the best mayor for New Yorkers, but the best mayor for Donald Trump as his administration.
Bloomberg's news desk editor Balazs Pens joins us from Hong Kong. So, Balazs, talk us through this mayoral race and where the polls are leaning at this point in time. It is certainly been quite a heated one as we head into today.
Yes, we live in unusual times, Jumana. Just goes to show that the Republican president is endorsing the former Democratic governor of New York in this race. which is a sign of just what a lightning rod this election has become and how much attention and money has been spent on this race, which Mamdani is expected to win very broadly. The big question is his margin of victory, which will give a lot of information to all the political watchers in the U.S. in terms of the state of U.S. politics and potentially the messages that the Democratic Party can use as they desperately search for messaging to challenge Donald Trump and the Republicans in next year's midterm elections. So there will be a lot of attention, not just on the outcome of this race, which, as I said, is widely expected to be ending up with Mamdani winning the mayor's position, but the margin of victory that he's able to score over Cuomo.
And Balazs, it's not just New York. We also have races in New Jersey and Virginia for governors as well. What are we expecting there?
Well, Joanna, 2025 is all about 2026. As is often the case with off-year elections, it's often a dress rehearsal for the following year, for next year's midterm elections, when the Democrats will be trying to unseat the Republicans from at least one house of Congress and break that Republican hold on government. So they are looking for the messaging again. They are running very different candidates from Mamdani in Virginia and New Jersey. They are more mainstream, down the center type candidates in both races. The Republicans are really hoping that they can score an upset, especially in New Jersey. In Virginia, it looks like the Democrats have a pretty wide, comfortable margin. But these will be also very comfortable races. And the Democrats are, again, testing some messaging. They are focusing on the economic impact of Donald Trump's presidency so far. And they're also focusing on the impact of the shutdown and some of the firings among federal workers who are very impacted in Virginia. So they are seeing if they can turn those elections into a referendum on Donald Trump's presidency so far, and whether they can glean anything from that as they look ahead to next year.
Balazs Pence, thank you so much for getting us up to speed on what to expect today. Well, coming up, Dr. Amrita Sen, Energy Aspects founder, will be joining us here at ADIPEC for a deep dive into the outlook for oil markets. Next, this is Bloomberg.
I'm not going to talk about an oversupply scenario. I can't see that. I can justify that. And I think all of what we are seeing is more demand. We just did not quantify how much is the additional requirement for power going to demand from gas, going to demand from oil.
In short, while we may face headwinds in the months ahead, the long-term outlook shows demand growth for every form of energy across every market. And ladies and gentlemen, our response to that demand should focus on the data, not the drama.
That was the UAE Energy Minister and the ADNOC CEO, His Excellency Dr. Sultan Al Jaber, speaking at the ADIPEC opening ceremony. Their key message being that energy demand is only going to increase. Now, this has been echoed by other oil majors. The TotalEnergies and BP CEOs say they're not worried about demand growth, adding that these sanctions on Russian crude will hit supply. For more in-depth energy conversation, joining us now is Dr. Amrita Sen, Energy Aspects founder and director of market intelligence. There's a lot going on here. This is sort of the long-term signal, as Dr. Sultan was talking about yesterday, and the short-term noise. I want to ask you about the short-term noise. First of all, were you surprised at the OPEC Plus decision over the weekends?
Not really, because I was in Riyadh last week, so I think that helps. But also, the ministers and generally the group have always been concerned about Q1. It's always the weakest time for fundamentals. They did the same thing this year, if you think about it. They paused, and the only increase that started was from April onwards, and that too, it was gradual, and then they accelerated it over the summer because the market can take the oil, right? So I don't think the Q1 pause is a surprise, especially when all the forecasts are calling for really big builds in that quarter. So why add to the surplus?
What are you actually seeing in terms of builds? I remember when we had this conversation in the summer, you said that you hadn't actually started to see the signals yet. Have things changed since then?
Great question. I think builds have started to come, but I think for me the biggest thing is the builds are still coming in less than what I call spreadsheet balances, like what the spreadsheet oil is showing, and definitely lower than a lot of key agency forecasts. Part of it is, of course, the Chinese buying, which I remember we talked about. But part of it is just supplies are underperforming versus what, there are official claims of certain countries that they are producing at X. But when you're doing the tanker tracking, you can see that those numbers are not coming up.
I mean, what people forget is OPEC Plus have put back these numbers, targets, but actually the effective extra production that's coming to the market from OPEC Plus is a lot less, right?
Exactly. And if you look at exports versus production, it's up about half of what that headline number is. Now, of course, domestic demand is higher as well, but still, basically, outside of core GCC members, there is no spare capacity left. So even the 137,000 barrels per day unwind for December, we only think about 70,000 actually comes to the market.
Okay, interesting. So let's also talk about Russian sanctions, the sanctions on those Russian entities, I should say. I think the market at this point really doesn't know how to read it because it's unclear whether it's going to be enforced and ultimately how much supply disruption this will lead to, and also whether these refiners in China and India are going to modify their behavior. So a whole bunch of questions for you there. How do you see this playing out?
I think the question you ask is very valid. Like the market's confused, or also I would say the market's kind of given up trading sanctions, right? They've done it before, hasn't worked because the US ultimately never enforces it. And if you are of the belief that Trump doesn't want high oil prices, why would you believe that they are going to enforce this, right? That's kind of the starting point. I was also in India last week, met with all the refiners. We put out a number when the sanctions were announced that anywhere between 1.4 and 2.6 million barrels per day of oil could be backed out temporarily.
Right.
And going through the Indian refiners and also some of the Chinese refiners, we are at around 1.5 million barrels per day, 800,000 from India, about 400 from China, and another 400 from Turkey. That's what is basically getting backed out now. Now, this oil is just going to show up on ships. Russia's not going to cut production straight away. I think that's where the point you raise about will the US actually enforce this, right? So we have to wait for 1 or 2 more months to see if they do enforce it. That Q1 balance, all that bearishness will go away. And look, Russia will find ways to get that oil to the market, but there will still be a disruption, whatever that volume is. So it entirely depends on enforcement.
Okay, and do you think that also maybe factored in to OPEC Plus decision to sit back a little bit and hold on to a little bit of extra capacity in case they would need to compensate for the Russian oil production?
I think there is enough capacity if there is... if there were to be a disruption, I think OPEC can add barrels, at least temporarily, right? I don't think that would have been the driver. The driver still was very much about these kind of fundamentals, what it's looking like. But yes, look, we have seen certain countries, including Russia, struggle to increase production in the last few months. So I'm pretty sure nobody was pushing back against the pause. Let's just put it that way.
What about other geopolitical developments around the world? I mean, the U.S. really ramping up the rhetoric on Venezuela as well. How closely are you watching that, Amrita?
Very closely, and we've got a very strong geopolitical LATAM team as well. They've been very, very busy on that. And look, our view has been that, the push is to get rid of Maduro. That's kind of where this is regime change. But we also don't think that means that Chevron's license will get revoked. I think we do think Chevron continues to get the oil out. But production's anywhere between 900,000 barrels per day to 1 million. There's a little bit of downside risk generally as well because of broader sanctions and China not being able to buy because of the lack of quotas. But we don't think there is a direct negative oil impact from what's going on there.
Do you think oil around this level, 60, 65 range is going to hold given some of the upside and also downside risk?
I think that's why we are stuck because nobody knows how to, people were going short, then the Russia sanctions happened, so now it's too risky. We've seen some of those short positions being moved further along kind of 2026, but at the same time you can't go long either because you don't know if these are going to get enforced. So I think we kind of stay here, but like we're saying, if these Russia sanctions do get enforced, then the risk is to the upside.
Dr. Amrita Sen, thank you so much. Really good to chat to you. Energy Aspects founder and director of Market Intelligence. Now, moving on, Turkey's inflation slowed more than expected in October, with prices rising 32.9% in annual terms. The slowdown is a sign the central bank's disinflation drive may be gaining traction, reinforcing expectations that policymakers will continue cutting rates. For more, Bloomberg's Deputy Turkey Bureau Chief Beryl Akman joins us now. So, Beryl, what are economists making of this surprise slowdown in October, given the uptick that we had in September?
Yeah, I think there's some relief overall in October numbers as it came less than expected by economists. In a Bloomberg survey, economists were expecting inflation in October to remain almost stagnant. So these numbers, I think, definitely give a boost to the central bank as well as to economists, and particularly to central bank because it has continued easing monetary policy despite some policy risks as well as inflationary risks. Now, economists note that October's numbers may be seasonal. Their food prices have remained risky, but they eased a little bit or moderated a little bit last month. But inflation expectations still remain quite high. But the central bank is trying to tread a careful balance between moderating the economy and giving some relief to businesses at the same time. So yesterday's numbers definitely have given a boost in that sense.
And how much room does the central bank have to keep cutting rates at this point, Beryl?
I think that is the question. The Monetary Policy Committee has one meeting left this year. Now, yesterday's numbers, although quite hopeful, I guess, hasn't really changed the trajectory for economists. They still expect a 100 basis point cut when the central bank meets in December. But ahead of that, there's an important meeting on Friday. The central bank governor, Fatih Karahan, in Istanbul, will present the year's last quarterly inflation outlook. Currently, the central bank estimates that inflation will be between 25% and 29% at the end of the year. But markets find that quite optimistic as they expect year-end inflation to be above 30%. So there's overall an anticipation that the numbers will be updated, and that will also determine what the central bank is thinking in terms of its easing moving forward. But so far, the overall expectation is that the central bank will have space to deliver another cut in December.
Beryl Akman, thank you so much. Really good to get a real test on how things are trading out in Turkey right now on the path for the central bank. Now, Palantir shares reversed gains in extended trade after the company raised its annual revenue outlook to $4.4 billion. The firm's third quarter sales outpaced analyst estimates with growth for its AI and data analytics products it describes as otherworldly. While analysts are broadly positive on the report, they note a concern over valuation, with shares up more than 170% this year. Starbucks is selling a majority stake in its China unit to private equity firm Boyu Capital for $4 billion. Boyu will take up to 60% of Starbucks' China retail operations through a joint venture. Starbucks will hold the remaining 40% and says it expects the total value of its China business to exceed $13 billion. And Microsoft has signed a roughly $9.7 billion deal to buy AI computing capacity from Iran, becoming the Australian company's largest customer. The 5-year agreement gives Microsoft access to NVIDIA systems in Texas and includes a 20% prepayment. Microsoft has agreed several multi-billion-dollar deals with data center operators over the past year in its effort to build and power AI systems. And Millennium Management CEO Izzy Englander has sold a roughly 15% stake in his hedge fund to a group of investors. Sources tell Bloomberg that the roughly $2 billion sale values the company at about $14 billion. The deal diversifies ownership among several large institutions and top executives. And a quick roundup of how markets are faring. We've got equity futures leaning towards the red today. A bit of a down day, risk off, handover from Asia, not so pretty. S&P futures down 0.6%, Nasdaq down 0.8%. Keep an eye out on JOLTS data, jobs markets data in the US coming up later today. European markets down 0.4% as well. And also keeping a close tab on earnings too, with those Aramco earnings coming through at the top of our show. But coming up, Microsoft is committing up to $8 billion in the UAE. We hear from the company's president, Brad Smith, on his firm's plans for the Gulf nation next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil earnings. Aramco profit beats estimates as a boost in production outweighs the impact of weaker oil prices. Meanwhile, BP investors are waiting for more updates on its divestment program. Election day in the United States. President Donald Trump endorses former New York Governor Andrew Cuomo for mayor and threatens to withhold federal funding in a last-ditch effort to prevent Democrat Zohran Mamdani from winning in today's poll. Plus, risk off. Asian stocks and futures extend losses as Palantir's earnings and uncertainty of the Fed's policy outlook weigh on sentiment. Well, it has just gone 9:30 a.m. across the Emirates. I'm Joanna Bersace in Abu Dhabi, where ADIPEC 2025 is underway. We're here for the second day in a row. So many conversations around energy, short-term and long-term drivers. Let's get you up to speed on these markets this morning, though. A bit of a risk-off tone. The handover from Asia, not so positive. Lots of red on the screen, as you can see. S&P futures down 0.6%, Nasdaq down 0.9%. Palantir in focus there, perhaps disappointing to investors who are looking to get more out of the tech company. But that's sort of set the tone for some of those tech names this morning. Gold also down 0.4%, so still hanging in at levels below $4,000. And then Brent also just shy of $65 here, down 0.3%. So a bit of the support that came through after the OPEC Plus decision over the weekend was short-lived. We're back to trading around this 65 level once more. In terms of the terminal chart today, the one that I wanted to flag to you is the fact that once again, what we're seeing in the S&P 500 is the breadth is narrowing. So you are seeing leadership dominated by Magnificent Seven, by a handful of those tech stocks. Only 40% of the index is trading above the 50-day moving average. So the rest of the index is trading below, and that tells you, again, where the dominance, the leadership is coming from. And also keeping a close eye on Aramco earnings this morning, too. That came out about half an hour ago, and I should say there was a beat on the top line, the bottom line, but also quite strong guidance around oil. They say 2026 oil growth to remain robust as well. And then also on gas, they've revised upwards their gas forecast. So again here, 2030 sales gas production capacity growth target has been revised upwards from more than 60% to around 80% over 2021 production levels. And this tells you a lot about Aramco, how they're also leaning in to gas production over the coming years as well. Now let's talk more broadly. The dollar is gaining for a fifth straight day as Fed officials offer contrasting views on the outlook for further rate cuts.
Keep an open mind. This really means assessing the incoming information, keep an open mind, and make the decision that balances those risks and ensures that the economy can go on and achieve this soft landing.
Looking ahead, policy is not on a predetermined path. We are at a moment when risks to both sides of the dual mandate are elevated. Keeping rates too high increases the likelihood that the labor market will deteriorate sharply. Lowering rates too much would increase the likelihood that inflation expectations will become unanchored.
I think that the Fed is too restrictive. I think that neutral is quite a ways below where current policy is. And given my rather more sanguine outlook on inflation than some of the other members of the committee, I don't see a reason for keeping policy as restrictive for a long period of time as we are. The longer you keep policy restrictive, the more you run the risk that monetary policy itself causes a downturn in the economy.
For more on what's moving markets, Paul Dobson, our executive editor for Asia Markets, joins us now. Paul, really interesting to hear the various Fed policymakers speaking now, because they seem to be quite split on what the Fed should be doing next. And if you rewind back to the meeting last week, the market was a bit surprised at the hawkish tone that came through from the Fed Chair Jerome Powell. What have we learned from listening to these various Fed policymakers over the last few days?
Hi, good morning, Jemana. So, divided Fed, as you say, lots of concern about whether they should be focused more on the labor market, which is cooling, or on the inflation outlook, which is still pretty sort of sticky and high. And, you know, the spectrum is wide. There's no very easy path for them to take. Some of them, like we heard from Myron, very much on the dovish front. But I think that what we've heard is a more noisy and growing in confidence sort of voice from the more hawkish side of the room, as it were. And I think that that's what you're seeing playing out in financial markets a little bit, where bets on a December cut, sort of showing that questioning about 50-50 now. And that is giving the dollar a little bit of a boost as well, as we see interest rates rise. People calculating that, maybe keeping your money in a US account will be more lucrative if interest rates aren't coming down so quickly. So it's lending a little bit of support. And the elephant in the room is, of course, that we just don't have very much data at the moment because of the government shutdown. And the longer that goes on, maybe that starts to weigh on the economy and confidence as well. So maybe that feeds back into itself. It's another thing the Fed policymakers have to take into consideration. So it's a little bit murky for them at the moment, feeling their way through, saying, we're data dependent is all very well, but if you haven't got much data to go on, then it makes it a lot more difficult.
Yeah, well, as you say, I guess people are relying a lot more on the private data. The ISM numbers coming through yesterday signaling a contraction, sub 50. Is that setting the tone for equity markets this morning? What do you point this risk-off handover from Asia down to?
Yeah, it's a good question. I mean, for equity investors, and I think you were very, on the money showing that chart about the narrowing breadth in the market. There's a couple of concerns. One, yes, tech has still been on that magnificent spurt higher, but the rest of the market is really starting to fall behind now. Is that telling us something about the outlook for the economy? Are people getting more worried about growth when you see the majority of shares falling each day, even with some of the leaders still pushing on higher? And, just the pace of those gains itself has been so storming. We even hear it from Palantir, talking about their earnings, talking about how well they're doing. We're in nosebleed territory here. Yeah, kind of like everything has been going absolutely gung-ho. But have we got ahead of ourselves? Is it going a little bit too fast? And I think that, when people passed through the Palantir numbers, they had a little bit of a moment of doubt about, what exactly is the outlook? How strong is it? And then over in Asia, we had some warnings even from in South Korea on SK Hynix, one of the biggest AI-related tech stocks in the index. The regulators saying, just hang on a second, this is going a little bit too fast. You might want to think twice about the reasons for investing at these levels. So that's caused a little bit of a check, I think. The momentum is still very much to the positive side for tech over the longer term, but it doesn't do any harm for the market to have a down day every now and then. So I think a little bit of a setback is what we're seeing right now. The questions to be answered will be whether that economic doubt starts to build and that leads to a bigger drawdown, or whether it's pause the refreshers, as people like to say.
Yeah, it's always bizarre to see red on the screen, I've got to say, Paul. Look, I also want to ask you about, earlier on you were talking about the stabilization in the USD and what's been happening also in gold, because we are trading below $4,000 here, and it feels as though a lot of the excitement, the momentum, the money that was going into gold has eased off over the last week. What do we see as the path forward for gold in an environment where the dollar is stabilizing now?
It's reasonable to ask that question. People were so bullish on gold, and there's so many calls for outrageously higher numbers from where we are here. I think that the calculus among investors is that central banks are going to continue to buy and accumulate more gold, and longer term, that still lifts the outlook in terms of the supply-demand balance. But maybe, once we got past Diwali, some of the retail investment frenzy that we saw has just started to cool off a little bit, particularly when people saw, yes, there can be a price correction. Market can go down as well as up. So people aren't quite so confident piling back in here again. Maybe they're waiting for, more of a confidence signal, or maybe, like you said, a bit of a pullback again in the dollar for them to get a little bit more confidence in it. But if you look across it, crypto, which we've been talking about a little bit in the same breath as gold, being an alternative to floating currencies, the dollar, the euro, the yen, where people have less confidence. Actually, crypto's been under even more pressure than gold in recent sessions, with Ether, for example, somewhere near a 3-month low. So that narrative about kind of the debasement trade and looking for alternatives outside of traditional investing has lost a little bit of its kind of tailwind just for the moment.
Paul Dobson, our executive editor for Asian markets. Thank you for running us through some of the drivers of these global markets the last few days. Well, Microsoft is planning to spend more than $7.9 billion on data centers, cloud computing, and employees in the UAE over the next 4 years. Speaking to me here at ADIPEC, Microsoft President Brad Smith says he sees the future of the UAE as one based in part on artificial intelligence. Here's some of what he had to say.
The opportunity is to really invest in this country. This is not money we're raising here. It's money we're investing and spending here. And we really see the future of the UAE as a future based in part on artificial intelligence. It's a future where the UAE is serving a large part of the world with access to this AI. And it's really a future that brings together not just technology and the infrastructure we're building, but the talent that we see here and the trust that it takes to enable the world to use this technology. So all of our investments really are designed to fit together around those goals.
So far, you've spent about $4.6 billion in capital expenditures in the UAE, a lot around data centers. Have there been any bottlenecks in getting them up and running?
Well, the interesting challenge in part has been getting export licenses approved.
Yeah.
And the good news
for the
is,
chips.
Yes, for the chips, for these NVIDIA advanced GPUs.
Yeah.
And we've had the good fortune, or really did the good work in many ways as a company at Microsoft, to do what it took to persuade the Commerce Department a year ago. And really, I think we're grateful to Secretary Lutnick and the Commerce Department this year for these export licenses. But they're not just acts of faith. I mean, we had to satisfy very strict conditions about the cybersecurity, the physical security, the other security protection of these chips to ensure that they stay under our control, that they are managed properly, that they're used properly.
So in the announcement today, you talk about the licenses enabling you to ship the equivalent of 60,400 additional A100 chips. And in this instance, involving NVIDIA's even more advanced GP300 GPUs as well. Can you give us a timeline for when you expect that to happen?
In months, not years, is what I would say. We are seeing demand here explode. And I think that's one of the questions that a lot of times we get from investors. Does all of this spending make sense? For Microsoft, we clearly believe it does, because we're seeing demand grow. And if you look at the UAE now literally leads the world in the percentage of the population using AI, 59.4%, number one. Singapore, about a point behind, is number two.
Wow.
But what we're seeing here in the UAE is across the economy, whether it's companies like ADNOC in the energy sector or the financial services or the healthcare sector, all of this is being put to work. I think it's actually improving the human condition, adding to prosperity, but it does mean that companies like ours need to keep adding the capacity that's required.
That was Brad Smith, Microsoft Vice Chair and President, speaking to me here at ADIPEC. Well, coming up, after drawing strong investor interest, AI-powered fintech firm Optasia is debuting on the Johannesburg Stock Exchange today. We'll discuss what it signals for the region's IPO market momentum next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Abu Dhabi. AI-powered fintech firm Optasia is set to debut on the Johannesburg Stock Exchange today. The listing follows strong investor demand for the deal, valuing the Dubai-headquartered firm close to $1.4 billion. For more, our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. So this really is quite significant for Optasia. Talk us through what it means to the firm and how big a deal it is in terms of an IPO.
That's right, Jumana. I mean, this company was started back in 2012, and this does mark a significant milestone, as you were just mentioning there. What the CEO told us is it's not only that South Africa is an important market for them, which accounts for about 10 to 15% of their business, but it's also an important step in terms of their growth and expansion plans, which are quite ambitious. You were just talking there about what this listing will value the company at, about $1.4 billion, but then also they're looking to diversify outside of Africa, potentially even into Asia and Latin America, and expand, some of this proprietary AI technology. Now, you were just mentioning there a little bit about what they do. They really tout this technology in terms of supporting those who are not able to get loans. They assess the creditworthiness of people and extend microloans out to them. And it could potentially be even bigger business for them. They're looking to expand into buy now, pay later, potentially even virtual credit. And if we take a look at some of the numbers of how many people in the world are reportedly still unbanked, it's looking at about 1.3 billion people. So they have very ambitious plans to expand, not just across the continent. Right now, they operate in just about 38 countries, but they have global ambitions. And so it is a very important day, not just for the company, though, but also for the South African Stock Exchange and also regional players who are watching quite closely.
Yeah, for sure. So an impressive growth story there for Optasia. But let's bring it back to the Johannesburg Stock Exchange. How active is South Africa's IPO market right now? Are we seeing renewed momentum?
Well, this is creating quite a bit of buzz, even when we speak to a number of analysts who are hoping that this listing, if it's successful, does re-energize the market, is what one analyst told us. And if you just take a look at what we've seen over the past few years, it has been, they're hoping for some more pickup. I was recently speaking to the Johannesburg Stock Exchange CEO, Leila Fourie, who is saying that there is a pipeline of companies who they're hoping can continue to re-energize this market, potentially a second listing from Canal Plus down the line. But yes, Optasia is really front and center. And what Leila also mentions is that this rotation out of some Western markets and developed markets into EM, she sees South Africa as a direct net beneficiary of that. But still, we're waiting to see really how that translates. I know earlier in the show you were talking about some of the risk-off tone that we're seeing. I was taking a look at the FTSE JSE Africa All-Share Index. It did close in the red yesterday, but we should note that October was an eighth straight month of gains for the index, its longest winning streak since 2013, and many analysts point to the renewed optimism around the South African market and potentially, again, even a rotation into emerging markets. So there is optimism. There are some positive signals, but a successful listing today and potentially some others down the line looking to the JSE or some of the other indexes across the continent will be something that analysts are looking for. So we'll be there at the Johannesburg Stock Exchange, though, to watch this officially debut.
Oh, exciting. Okay, I'll watch out for that then. Jennifer Savazaja, our Chief Africa Correspondent in Johannesburg. Now for a look at some of the other stories we're following today. Nigeria's markets are reeling after U.S. President Donald Trump threatens military action against the country over attacks on Christians. The country's dollar bonds saw the steepest losses in emerging markets, and the naira dropped more than 1% in early trading. President Bola Tinubu rejected Trump's characterization of the country, saying Trump was disregarding, quote, the consistent and sincere efforts. Shell is ramping up in Angola, investing about $1 billion in new offshore oil blocks as the country works to revive production. The deal with Angola's oil regulator covers 17 exploration areas, including ultra-deepwater sites, as the southern African nation looks to keep crude production above 1 million barrels a day. And coming up, demand is growing. That's according to TotalEnergies CEO Patrick Pouyanne. We hear more about his energy outlook next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Abu Dhabi. The CEO of TotalEnergies isn't worried about oil demand growth. Patrick Pouyanne told me that despite the slowdown in China's usage of crude, there are plenty of other countries that need the commodity.
The India economy is moving to more manufacturing economy, and we observe that they have also a growth of demand in India of 200,000 barrels per day, so over-engined. So I'm not worried about that. That's the reality. Then you have, at a certain point, like always, you know, we had 3 years at $80 per barrel. It's a stupid industry, you know. When you have more money, you invest more. When you have less, you invest less. So it creates cycles, that's all. So 3 years in a row of good price, people were quite enthusiastic, including shale oil in the US. When the price will go down, don't believe. They are less enthusiastic. There is a debate, where is the break-even of shale oil? Less than 60. So you will have a natural way to adapt to the oil price. Again, don't forget the elements I mentioned recently in an interview, that these sanctions, honestly, we are going to a new stage, no, 2 stages. Don't forget that the 2 companies, Russian companies, which have been targeted by the US are more or less representing 60% of the oil exports from Russia. It's really, and you know, when you have US sanctions, you have secondary sanctions, and everybody is taking that seriously, because then it could become a big issue. So then you will have some impacts. It's not maybe immediate, but we'll have some impacts, because in particular, you'll see longer trips for tankers, etc., etc. We'll have to readapt the system. That creates costs. Costs somewhere have to be absorbed in the system. So I think it's a world which is facing part of this situation. Again, the importance is the medium term. And on the medium term, we know that we have to continue to invest in oil. And that because by the way, OPEC as well today is unwinding part of its spare capacity. So the quicker they unwind their quota, the less they will have spare capacity. We could face a situation with a lower price, less investment, less spare capacity, and then the price will go up again. So that's the volatility. But I mean, again, then we need to be ready to continue to deploy our investments. And our company, we are growing 3% per year of production. So I'm optimistic that the price will be good. I'm fundamentally bullish on the oil price.
That was TotalEnergies CEO Patrick Pouyanne speaking to me on a panel yesterday here at ADIPEC. Plenty of discussions taking place, as we've been highlighting the last couple of days, all about the intersection between energy and artificial intelligence, a really big theme over here, and how AI data centers are going to drive energy demand over the next decade. Quick look at U.S. equity futures before we head out. Things are leaning towards the red, a not so positive handover from Asia today. Take a look at the NASDAQ, down 1.1%, Palantir stock in focus. But that is it for Horizons Middle East and Africa. I'm Johanna Bersetchi here in Abu Dhabi today. Stay with us for Daybreak Europe.